Okay, if any of you watched my last video, you would know that I told you that when we hit this point of interest up here, we will likely be ranging here. That doesn't mean short right away. I was very heavily saying don't short right away. If it gives you longs, keep longing, right? And you're likely going to distribute here in this range. Lovely. So we got our big distribution, which I was asleep for, but whatever. We got a big distribution, and our price is going down. Lovely. Exactly as we predicted and exactly as we thought. We luckily didn't come to our inducement order block up there, because if that happened, then I'd be more inclined for a higher low. However, we didn't do that. So now this is good. Now, am I confident that this will continue and not just stop here? Quite honestly, yes. Every time open interest has been absolutely nuking compared to price. It's been big capitulation events over and over and over again. People are closing longs at an astonishing rate, right? And obviously smart money's buying from them, but that doesn't mean we can buy. At the end of the day, this has happened now. Here, it's happened almost every single leg down. I mean, especially this one. Look at this, right? Right? Look at this. The low is right there. Look, you get a capitulation event every time, but you still pop down for multiple days straight, right? So, am I confident this will still come to a long zone? Or at least sweep this low? If you sweep the low again, it's different. The first sweep was awful because it didn't come to a long zone and it's so this low. But now if you sweep these lows again and then deviate, well, now you're just ranging. Now you're in a range, but now you deviate two times, right? That's now technically an accumulation, okay? But the only issue is that it doesn't follow range principles, because in an uptrend, you mark it from the high to the low. So if you mark from the high to the low here and you draw your range tool, that's not my range tool, but you draw your, that's not it as well. If you draw your range tool, range deviation, you went above the 1.25 band with the close, and you went above the 130 buffer room. So you can't mark it as an accumulation, but you can still mark it as a range deviation. And now you're looking to come up into the range, however high it wants to go, maybe even sweep the highs. It depends what price gives you after that. So that's the game plan. There's nothing really there. It is just an update, and I'm just saying that, if you subscribed, you would see the video, right? And I've called now every move, actually. On every video I've made, I've called at least every single move. So I've called the top, I've called the bottom, right? I called the bottom here. Okay. I've now called the top, not the timing wise, but I called exactly what price is going to do. You're going to range, you're going to distribute, you're going to pop down. And then in the comments, I posted that this is a pre-market weekly candle open that has no wick. You normally come back to these 1 or 2 hours after. Now, that didn't happen 1 or 2 hours after, but instead of doing that, you continued the entire range, which I said you will range in this point of interest the entire time, likely. So, this is more of a shill video that, you should maybe consider subscribing and liking. And if you don't like the TA later and I'm wrong or whatever, you can always just unsubscribe. There's no harm that you gain out of it. At the end of the day, it's free. Okay? That's all I'm going to say. There's nothing really else to say game plan wise. If price comes down, you know what you're looking for long wise. If price gives you absolutely no deviations and hit the zone, and then starts ranging or starts giving nice structure, well, now you can start considering longs, Now, if you get nothing, and it just pops straight down, I mean, I'd be a bit worried in terms of the whole structure here. I'm not gonna lie. I mean, we could always just sweep one low, and that's still fine, but this entire structure point, I wouldn't like it.